Zach Perry here, the Fortune Firm, here to answer the question, how much does all this cost? How much should it cost to set up a retirement plan? So that obviously depends on what type of retirement plan and who you are, right? If you're an employer, it obviously costs a lot more to set up a retirement plan for your employees than it does to the employee. If you're the employee, it typically doesn't cost you anything out of pocket. You make your contributions, and then the financial planner, they're going to make money on your money as time passes, right? Now, let's talk about that for a little bit because a financial planner, there's something what they call money under management, okay? And so the more money they have under management, the more they're going to make. So if you, and the rates of what they're going to get depend, from broker to broker, and it also depends on how much money you have with them. Typically, the more money you have with them, the smaller the percentage they get. The longer you have with them, there are certain fees that go down as time goes on. But as a general rule, a qualified plan in a mutual fund is going to cost you between 3.17 and 6.22% every year of your balance, okay? So if you've got $100,000 in your qualified account, your financial advisor is going to cost you between $317 and $622. Did I do that right? No. $3,170 and $6,122. That is what Forbes estimates the real cost of owning a mutual fund is per year. Okay. Now, if your mutual fund is performing well and it grows by 15% in a year, then that's fine. You have no problem with that, right? Your 100,000 goes from 100,000 to 112,000, and then maybe shrinks by 5,000, so it's 107,000. Now, when you get your statement, it's going to show 12% growth. But then when you do the math, you're going to realize, oh, it wasn't quite 12% because that was growth before fees. The growth after fees was actually 107, or it might even be lower than that based on the fact that the number they report to you is not based on the growth of your number, but growth of the funds you're in, which is two different things. So what's the cost of owning a mutual fund? Between 3.17 and 6.22% for a typical mutual fund. That's the cost. Now, the scary part about that is you're not going to have 12%, 15% growth every year, right? You may have a growth of 5% one year. And if you've got 5% investment advisor fees, then you haven't grown at all. If you lose in a given year, which you can do with mutual funds, right? And on average, every 9.875 years, the stock market drops by 44%, okay? Which means on those big drops that come on average every 10 years, or even on the little drops that come in between, you lose in the stock market, but then the financial advisor still takes their cut. And so it just compounds your loss. So earn or lose, your financial advisor gets paid, okay? So that's the cost of owning a mutual fund. What about if you go into an IGIC? Now, I recognize typically when you hire an attorney, you have to pay the attorney. You're going to get a bill. That's not how we operate things. I learned a very valuable lesson when I was a trial attorney. Now, if you go to get a trial attorney because you've been injured, for example, typically you don't pay them anything because they have a brilliant business model. They say, you come, you hire us, we will not charge you, we'll even pay for your case, and then we'll make the insurance company pay us. So the insurance company's going to pay, you're going to get part of that, we're going to get part of that. So it's brilliant because you can afford a top-level attorney because you don't have to pay for it. They're making the insurance company pay for it. It's a brilliant business model, makes it really easy for the consumer. That's what we've done here. When you come and you talk to us about a plan and you want to do the debt plan, or you want to do an IGIC so you can invest tax-free, or you want to use bank leveraged money to pay premiums in your plan so you can have an even bigger plan and have someone else pay for it, you are not paying us at all for that. We've set up a business model to where the insurance company pays us. And what's more, we don't have all these hidden fees. When we show you the future projections, we're going to show you the projections that are your numbers, Okay, so the numbers we show you, that's the numbers in your account. The percentage growth we show you, that's the percentage growth that doesn't have anything to do with what the insurance company is using your money to grow for, how we get paid. We're going to show you exactly how your money is projected to grow, and it's not going to be, hey, we're projecting to grow this much, but hey, then we take our fees out and then it's only going to grow this much. We're going to project to you exactly what it will look like for you, but of course, that growth should be a pittance compared to the growth you experience when you go invest, when you take the loans out from the policy and you go invest in the outside, in whatever your investment of choice is. So what does it cost you for any of those programs? It doesn't cost you a thing. We've set up our business so that you don't have to pay us. The insurance company pays us. It's a win-win-win. Now, if you do have other needs, like if you want to set up an entity, or if you have qualified money that you need to roll over into one of these plans, there is a nominal, moderate cost. It's more closer to nominal than moderate. There is a cost of doing that. For example, with the rollover, we charge you our costs. We don't up the price. We charge you what we pay to get the entity set up and to hire the custodian and whatever it takes for us to move the money from your qualified account, jump through all the hoops the IRS has set up, make it so the money is freed up in the IGIC, and our cost to do that is $2,860. That's the cost, and that's what we charge you. If you want to set up an entity, we'll charge you. And depending on what type of entity you need, we have different rates for that, right? And so, but if you're just setting up insurance and we don't have to, an IGIC, we don't have to set up any special entity to meet any legislative or administrative or regulatory requirements, then the insurance company pays for that. So very, very reasonable. And then on top of that, our $2,500 revocable living trust, we do for free. We offer that to all our clients who do an insurance plan. So if you did pay $2,860 to do a rollover, but we gave you a $2,500 trust for free, then the trust almost pays for that, the value of the trust. So we will do a free revocable living trust to anyone who does any of these plans. So you will walk away with, most people will walk away not having spent anything. They'll have a tax-free growth retirement plan set up, maybe set up also to repay debt. Anyway, they've got this awesome, this stellar program that can grow tax-free. They've got a trust, and if you don't know what a trust is, watch my video on what a trust is, but a trust is very important. If you are mortal, or if you have kids, or if you want to retire, if any one of those things is true of you, you need a trust. A trust speaks for you when you cannot. It's not just a matter of avoiding probate, although it does do that. A trust is very valuable. It is the foundation of any estate planning. So we will give that to you for free if you do a plan with us, because we love you. I mean, that's why, really. Also, we want to incentivize you to give us a call, right? So if I'm being completely transparent, it's because we want your business. We're bribing you to call us with a free trust if you do a plan with us. Anyway, that's what I have for you. If you liked this video, hit the like. If you did not like this video, don't hit the like. Hit the subscribe, ring that bell. My name is Zach Perry. That's all I have for you. May your fortune be with you always.